Hey, hey, everybody. Well, that was a blast from the past. At least our approach hasn't changed over the years. I'm Cliff Greenberg. I've been at Barron Capital for 27 years. I ran into an old friend here today who said, you really still look the same, and honestly, I beg to differ after looking at those videos. In any case, nice to be with you all today.
Yeah. I'm Andrew Peck, and ditto to not quite looking the same. It's great to be back with all of you for my 26th conference.
And go ahead, you can
Hold
clap
your
for
applause.
And I'm Amy Chasen. I'm excited to be celebrating my 10th year on this stage with my two favorite finance bros and all their sidekicks.
Yeah. So now for something fresh and different. We're not going to rehash all those old talking points. We're going to hear from some of our outstanding portfolio managers about what's happening in their areas of expertise. Welcome, Jeff Kolitch. Jeff is the portfolio manager of the Barron Real Estate Fund and Real Estate Income Fund. His funds have been fabulous performers over the years. And though, Jeff, your track record has been stellar, over the last couple of years, real estate stocks really haven't performed that well. Why are you so excited right now?
Well, thanks, Cliff. It's great to be back on stage. Been a couple of years since I've been up here. In fact, the last few years, I was just sitting up in those front rows, dancing to Bruno Mars and Justin Timberlake. Anyone want to see me dance?
No.
Won't dance. But I am going to tell you why we're optimistic about real estate. And we're optimistic about real estate for 4 reasons. Number 1, we believe that the dark clouds over real estate are starting to lift. Number 2, should interest rates begin to decline, that would be supportive of real estate. Number 3, our team's view is that the real estate recovery is likely to be faster than expected. And we're identifying a lot of value in real estate right now.
Cool. Let's get into it, Jeff. What did you mean when you said the dark clouds over real estate are lifting?
So the last 5 years have been particularly challenging for real estate. There have been a series of issues that have been weighing on real estate, including the lingering impacts of COVID, 525 basis points of rate hikes, commercial real estate crisis fears, credit fears, balance sheet fears, recession fears, etc. Our team's view has been that these concerns are exaggerated, unlikely to materialize, in fact, a hyperbole. And now there's emerging evidence that the dark clouds over real estate are lifting and brighter days are on the horizon. The bottom line from our perspective is that business fundamentals are strong, balance sheets are in good shape, interest rates may head lower, and valuations are attractive.
Great. Jeffy, it does seem like the Fed is pivoting. Why, if we get lower interest rates, would that be a tailwind to real estate stocks?
So interest rates certainly are topical right now. We just heard from Fed Chairman Powell yesterday, and he keeps repeating this word, recalibrating interest rates, which doesn't mean one and done. It means that there's going to be a series, but we just don't know what the path is going to be or the rate of change. But unquestionably, if interest rates head low over the next few years, that's going to be bullish for real estate. And why is that the case? Well, number 1, it's going to lower borrowing refinancing rates. Number 2, it will support real estate valuations. Number 3, it should reduce the weight of debt refinancings and reignite the real estate transaction market. It will engender optimism in tenants as they'll feel more comfortable investing in their businesses. And of course, it will increase the relative attractiveness of REIT dividend yields relative to fixed income alternatives. Our real estate funds historically have performed quite well during periods of declining rates, and we think they're going to do so once again.
Cool. Tell us more about why you think there's going to be a fast recovery.
So you've invested in real estate for a long time, and you've seen this,
Yes.
that what we have in front of us right now is different than what we've seen in prior cycles. The historical curse of real estate has occurred when excessive leverage is used and when real estate becomes overbuilt. What we have in place right now is a very different dynamic. Number one, occupancies generally are low 90% to mid 90%, reflecting very strong customer demand or tenant demand. Number two, and this is a very important point, the silver lining is that there's been very little excess construction over the last 3 years and very little in the pipeline over the next 3 years because it's not economical to build because of higher land prices, labor prices, material costs. And number three, balance sheets are in good shape. This unusually supportive environment should lead to faster rent growth, home price appreciation, cash flow generation in the years ahead. And because of this, our team's quite excited about the prospects for our fund. And again, we're identifying value in real estate.
Great. Hold that thought. We're going to come back in a little bit to talk some stock ideas with you. But now over to Andrew.
Great. Thanks, Cliff. Thanks, Jeff. All right. Time to talk technology and innovation. And with me, I've got Mike Lippert, the head of our technology research, the portfolio manager of Opportunity Fund, the co-manager of our technology fund, along with Ashim. So Mike, you've been investing in technology and the innovation space broadly for, what, close to a quarter century now. Why is it a good place to invest?
Yeah, 23 years from, you can see on that video how long it's been. Let me give you 3 reasons, Andrew. Number one, growth. If you believe Warren Buffett, in the long term, the market acts as a weighing machine. The best stocks are those that get fat on profits through sustainable top-line growth. The most powerful drivers of durable growth are secular trends like these, all driven by technology advancements. Two, the future. We live in the age of technology. SpaceX rockets land in mechanical arms. Electric vehicles drive themselves. Robots help doctors perform surgery and will soon work in factories and maybe even our homes. AI agents assist human workers and may one day replace them. Three, returns, which I think you'll have something to say about, won't you?
I will.
The top investments of the last half century all won by innovating and exploiting technology breakthroughs. That's why the Magnificent Seven all have trillion-dollar market caps. It's also why these companies yielded 10-bagger returns for us.
Great. Sounds certainly very exciting. So Ashim, tell us, why does tech outperform?
Well, Andrew, the focus of Barron is always long-term. So let's look at long-term returns. Technology broadly, as you can see, has outperformed the S&P by roughly 500 basis points over 20 years and over 900 basis points a year over 10 years. And the reason is that technology is a bet on the future. Put simply, it's a bet on innovation.
That all sounds good, but tell me, why does Barron outperform in technology? What's your secret sauce?
I'm glad you asked. Andrew, the reason that we outperform in technology is, first, we only invest in exceptional leaders. These are entrepreneurs who eat, sleep, and dream about how to make their product better. Second, we look for companies that have what we call accelerated innovation cycles. They're constantly innovating. These companies are investing today for products that won't come to market for 2 to 3 years. And third, we look in a broader universe of potential investments. We don't just look for companies that are technology, we look for companies that are enabled by technology.
Interesting. AI, you heard of it?
Never heard of it.
Okay.
What is it?
That's my question to you.
Okay.
Can you explain to this audience, which comes in all shapes and sizes, what is AI? What does it mean?
I can try. Simply put, artificial intelligence, or AI, is technology that enables machines to learn, reason, and make decisions, often mimicking human behavior. AI can also synthesize a thought or even a comedic concept better than many humans, at least this one. For example, I went to ChatGPT and I said, make me a cartoon of something that would be topical, but also explains what AI is. And this is what it came up with.
So Mike, we've been investing in AI for a while. What's been our best investment in the space?
I think we could all say this one together. NVIDIA. That's been our first and best AI investment. NVIDIA is the pioneer of semiconductors powering the AI revolution. We made our initial investment back in 2018, 4 years before the ChatGPT moment, after spending a full day with NVIDIA CEO Jensen Huang. Back then, Intel dominated data center computing, and Wall Street viewed NVIDIA as a video game chip supplier. We believed NVIDIA's parallel processing technology would be the winning platform to power AI workloads, and AI would disrupt how data centers are built. NVIDIA not only captured market share from Intel, it drove a massive inflection in spending. NVIDIA's stock left Intel's in the dust, and our investment in NVIDIA has delivered 66% annualized return for opportunity and even higher for technology fund.
Wow, great. Well, I'd love to hear about some specific stocks, but first back to Cliff. Tell us a little bit about small caps.
Great. Thank you, Andrew. We believe small caps are back. Let me introduce our terrific small cap managers, Randy Gwirtzman, Neal Rosenberg, and Laird Bieger. Small cap investing is the heritage of Barron Capital. We have 3 small cap funds investing in the space: the Barron Growth Fund, Barron Small Cap, and Barron Discovery. All have very strong long-term records, as reflected above. Now, we see great opportunities for our small cap funds. Let's turn to our panel and ask them questions why. Randy, what do you enjoy investing in small caps?
Thanks, Cliff. As you can see, we've got terrific long-term returns and excess performance in all of our small cap strategies. All 3 strategies have put up 4% or more returns greater than the index every year since they were started. And that really adds up. So what do we like about small caps? Well, first, markets are inefficient. We find these stocks are underfollowed and they're under-researched. So what we do is we do an incredible amount of research on these companies, which allows us to find small companies that can have great competitive advantage. So we find hidden gems in this market. These are small companies that can grow to become very large over time. Laird and I like to say you never heard of these companies, but you will. And finally, the market overreacts many times because it doesn't understand the stocks as well as we do. That gives us an opportunity, because we've done all the work, to get great stocks at a discount. Now, bear with me. I've got kind of a technical chart that shows all this. Let's see if we put that up. OK. This is an actual photo of Barron's offices during market hours. You can see the market is blindly swinging at the pinata of returns, and Laird and I can jump in and pick up these hidden gems, get excess returns, and deliver them to you, our shareholders.
Nice. Neal, why are we at Barron so successful investing in small cap stocks?
Sure. Well, there are a few reasons for our success. First, we have a large and growing research team. There were 16 of us when I started. Now we're up to 44. That lets us understand businesses at a granular level and find opportunities before they're reflected in stock prices. Second, we have amazing access to management teams. Management teams know that we have expertise in their businesses and that we own stocks for the long term. This creates a virtuous cycle. We meet more managers, we ask more questions, and we make better investment decisions. Finally, we have a very distinctive investment approach of buying and holding small companies for the long term. We've had remarkable success in finding very special companies. We buy them when they're small cap, and then we hold them as they become mid cap or even large cap stocks. These 3 funds alone have invested in 39 10-bagger stocks, or stocks that have gone up tenfold or more. That includes an amazing 26 15-baggers. Stocks like MSCI, who joined us up on stage this morning.
Oh, great. Now that's impressive. Applause for that. That's a good one. You see, long-term investing in these special small companies really has been the special sauce of our success in these funds. Laird, explain why now is a great time to be investing in small caps.
Sure, Cliff, thanks. There's 3 reasons why you should be thinking about investing in small caps today. First reason, small caps have underperformed, and we think there can be some reversion to the mean. Small caps for the last 3.5 years have underperformed large caps by, as you can see, 56% for large caps, while small caps have been down 13.4% over the last 3.5 years. It has been a tough few years for us small cap managers. We could use a hug. Second, valuations of small caps are cheap. They remain attractive compared to their large cap counterparts. In fact, small cap stocks are the cheapest they have been in the last 25 years. As you can see, most of the time, small caps, which are the orange line, trade at a premium to large caps because of their faster growth, but they're currently trading at a discount. Third, small caps are underowned. Investors' total small cap growth exposure recently hit a 10-year low. When investors are shunning an asset class, as they are with small cap growth today, this can be a contrarian indicator and a positive predictor of performance in the future.
Fabulous. Thanks, guys. We'll come back in a little bit for some particular investment ideas that you love. Let's go over to Amy.
I'm here with Alex Umansky, who's the portfolio manager of Barron Global Advantage Fund, our Fifth Avenue Growth Fund, and Barron Durable Advantage. And today we're going to focus on Durable Advantage. So Alex, what does Durable Advantage mean?
So how do I explain Durable Advantage to this audience? So there's a German portfolio manager, and he has a wife and a mistress, but loves his wife. There's a French portfolio manager who has a wife and a mistress, but loves his mistress. And then there's a Jewish portfolio manager who has a wife and a mistress, but loves his mother. Now that's Durable Advantage. According to ChatGPT, the word durable is associated with the multifaceted nature of broader concepts related to quality, longevity, and security. So just out of curiosity, how many of you have heard of ChatGPT? Raise your hand. Oh, wow. That's a lot. How many of you have used ChatGPT? Wow. So probably just like Ashim over there looking for jokes, right? So ChatGPT wrote this joke for me too. Pretty good, right? No, because ChatGPT can't do ethnic jokes. Come on, guys, right? Like, what AI is going to offend all the wives and mistresses,
mothers,
not to mention portfolio managers, right, as a class at the same time. So, yeah, that only a human can do that, and a dumb human probably. My wife's probably walking out as I speak. 50-50 on the mistress. At an emotional level, the word durable has many positive associations: longevity, reliability, resilience, security, a sense of confidence in the quality of something, and the comfort of knowing that the product will not fail easily and perform reliably over time. Most importantly, durable is something that must endure. It is something that must withstand the test of time. And so we constructed the Durable Advantage Fund with all of that in mind. So just look at these key performance indicators. We are large, right? You heard from guys that they like small, and as Laird was telling them that small has been really underperforming large, I heard a couple of ladies like, yeah, like large's good, but small's okay, large performs better, right? I mean, a little juvenile, he wasn't talking about that, but it's okay. I mean, their wives, mistresses, large. Large is better, if you can help it. On average, the companies in our portfolio grew sales 35% faster than the index. They grow earnings 10% faster, have profit margins that are 30% higher, and all of that with half the earnings volatility while using half the leverage. I mean, what's not to like?
Well, I mean, that sounds great in theory, but does it work in real life?
I believe it does. So this chart shows monthly rolling returns compared to the fund's index and peers. As you can see, we outperform just over half the time in any one random month. But as the time horizon expands, so does our win rate, which increases to about 60% on the quarterly basis, 70% over any one given year, 80% over 3 years, and our win rate improves to between 95 and 100% over any 5-year period. And so in the end, you would end up with something that looks like this, which we think is pretty cool.
Got it. Okay, so higher growth and profitability, lower volatility. Sounds good to me.
But if there's just one message that I wanted to leave you with tonight, is that when you invest in the Barron Durable Advantage Fund, you will sleep well at night.
Aw, that's so cute. All right, thanks, Alex. We'll be back to you shortly. Cliff, turning it back to you.
Yeah. Jeff, back to you. Please explain where you're finding some of your exciting real opportunities to invest in real estate stocks.
Sure will. Alex, by the way, that was great. You're a tough act to follow. We could spend an hour on the topic of where we're finding value in real estate right now. Of course, if we did so, Cliff, Ram would probably run across the stage and try to tackle us and throw us off. Not to worry, he won't be able to catch us nor tackle us. But in any event, let me distill it down to 60 seconds. We're finding opportunities across several different areas of real estate. There are 6 investment themes that our team's focused on. Number one, we're finding opportunities in REITs and several subcategories of REITs. We're quite optimistic right now about senior housing and expressing that through a terrific investment in Welltower. We're bullish on data center companies such as Equinix and Digital Realty Trust, and a series of other REITs, apartments, shopping centers, malls, even an office asset that we recently began purchasing. That's number one. Number two, you know we've had a long history that we've expressed where being bullish on the for-sale housing market, given the structural shortage of shelter, would serve our clients well, and we're investing in terrific companies such as Toll Brothers, D.R. Horton, and Lennar. Investment theme number 3 is travel. People are electing to reallocate their discretionary capital away from goods purchases more towards experiences such as travel, and terrific companies such as Hyatt Hotels and Hilton Hotels should be beneficiaries for years. Number 4, you and I have invested over the years in commercial real estate service companies, terrific best-in-class companies such as CBRE Group and Jones Lang LaSalle. This is an oligopolistic industry that will benefit from an ability to continue to acquire some of the smaller players. These businesses are growing faster than the market, yet they're trading at a slight discount to the overall market. 5, real estate alternative asset managers, companies such as Brookfield and Blackstone, in our opinion, are undervalued and are capturing an increasing market share of an ever-growing pie of assets being redirected a bit to alternatives. And lastly, a big focus in our organization is the intersection of technology and real estate, or prop tech, that we're focused on quite a bit as well. So those are 6.
Fabulous. Thank you, Jeff. Over to Andrew for some technology ideas.
All right.
Well
Thank
done.
you, Cliff. Thank you, Jeff. All right. Ashim, technology. Give us something to be excited about.
Okay, thanks, Andrew. A company that we're excited about investing in earlier this year is a company called Axon. As you can see from the chart, so was the market. Axon delivers or develops public safety technology. So if you see policemen wear body cameras, that's the type of technology Axon develops. What we wanted to show here was a real-world example of how they're using AI in their products. So they have a piece of software called Draft One, and it basically takes the video footage from the body camera and using AI creates a police report out of it. So if you've ever seen police, men or women, no offense, I have friends who are, they type like this. Mm-hmm. This makes it much more efficient when they spend 50% of their time doing paperwork and administrative work to have a pre-populated report. This is the cutting edge of what we're seeing in applications in AI.
Wow, makes sense. Amazing stock chart. All right, Mike, try to top that.
Well, I'm excited about both of our portfolios, but I will showcase one company, and I'll do so without even saying AI. So CoStar Group. CoStar Group is Opportunity Fund's #1 10-bagger, and is still a top idea today. CoStar is the leading real estate information and marketing services company. Let me highlight 3 things. First, management. CoStar CEO Andy Florence has made several appearances on this stage, and he is one of our best examples of we invest in people. Second, what we call stacking S-curve. Multiple products that enable a business to grow faster for longer. CoStar has stacked many and is now focused on its latest, residential real estate with Homes.com. Third, valuation. CoStar stock has been flat recently as the market has penalized it for investing in residential. CoStar's core commercial business, however, is trading at a historically low multiple, and we believe residential is significantly value accretive.
Wow, makes a lot of sense. All right, back to you, Cliff.
Great. For some small cap ideas, Randy, take us out.
Yeah, that Axon's great. We've owned that for 2 years. It's one of those never heard of them, but you will. It's a really great company. So we invest in AI as well, but we like to have companies that practically use AI to improve their products. So these are companies like SentinelOne, which uses AI to enhance its cybersecurity software to protect clients' networks. Kratos uses AI to fly military jet drones that are unmanned. And Tempest, it uses AI to enhance its cancer diagnostic tests, as well as to mine its database of cancer information in order to help its client pharmaceutical companies develop drugs to fight cancer.
Yeah, so we're really excited about proprietary data businesses. These are stocks like MSCI or like CoStar and like Gartner. We think AI is going to let them derive new insights from their growing data sets. That'll let them serve new users, and it will also help them raise prices to reflect the greater value they're delivering. And since they're going to grow faster than they have historically, we think they're also going to catch higher multiples than they have historically.
Great. Interesting. LB, what are you jazzed about?
I'm excited about the growth in online sports betting, and specifically Barron Discovery holding DraftKings. DraftKings is one of the two dominant players in the online sports betting and iCasino market. We believe DraftKings can grow its revenues at over 20% for the next few years from a combination of growth in existing states and new states legalizing sports betting and iCasino. We see revenues which are only $300 million or less than that in 2024 growing to $3 billion over the next 5 years, or a tenfold increase. And we think the stock can more than double over the next 5 years along with those revenues.
Fabulous. I own that one too. That's a goodie. Amy?
All right, Alex, what are you most excited about?
I'm afraid it's not for this audience. I am bullish on growth equities, and I too could mention a few specific companies, and I'm certainly excited about many of the businesses mentioned by my colleagues, which are owned throughout the funds that I manage. But speaking from personal experience, I wanted to highlight yet again how underrated good sleep really is. So my recommendation is buy the Durable Advantage Fund, and you will sleep well at night. That's all I got.
Great. Well, thank you, Alex. And thanks to all of you for sharing your great insights with all of us. We believe we've assembled the best and smartest research team out there, and today was just a sampling of that. We're very proud of our whole team of 44 investment research professionals who support our broad product offering.
And remember, you've just heard about a subset of the 19 mutual funds and strategies that we manage. We hope this discussion has given you a taste of the in-depth research that our team is conducting every day on a variety of excellent and exciting businesses that we hope and have every reason to expect will continue to generate great returns going forward for all of our shareholders. So thank you.
Thank you.
Thank you.
Well done.